Hey friends, so today's talk is about it's the general process, the general methodology about how you go about mapping, kind of a cartography methodology of mapping markets, mapping the markets that you want to trade, and using volume profile as your primary way to identify market structure. But it's not all about market profile. This is a multidisciplinary approach where market profile or volume profile actually takes a huge part. But before you even get into the volume profile and the market structure, you need to understand the market that you're actually working in. And this goes back to my supposition, my absolute belief that technical analysis is not the whole picture. It's only a portion of the picture. It is the picture that helps you model where you believe the market is going. And so what we're going to do is, first of all, we're going to talk about the basic steps. And that's what this video is going to be about. And then in subsequent videos, we'll talk about the individual aspects of how you go about accomplishing this bigger picture. Okay. So let's go to that. Let's go to the tablet. We can do the split screen. I like this better. All right. Let's get to these. These are the primary steps. Now you may be wondering, well, Ernie, why aren't you using something like PowerPoint or Keynote or something? Because I enjoy, this is more visceral. This is more, involved. And I would recommend this to anybody that, it's one thing to be able to put all this stuff into a PowerPoint and make it look beautiful. It's another to actually write it down because you retain that kind of muscle memory and it gets ingrained in your head. So the primary steps, the very first step is, as I said, know your market. All right? What do I mean by that? I mean, know your market, man. Know what. So if you're trading platinum, or if you're trading crude oil, you're trading gold, you're trading even the E-mini S&P, the S&P 500. Know the market, understand it, from a ground level. Understand what the influences are, and that's the big thing. Understanding what those influences are. So I'm going to make that kind of like the sub point here, the sub bullet. Let's use a color that will stand out. So understand the macro, economic, and political influences. That is so important. So every asset, every market is influenced by macro and political influencers. That's kind of redundant. And don't, look, hey, we're not talking about politics here, Ernie, right? Wrong. Politics and the political landscape has as much or even more of an influence on the price direction, how bullish or bearish you should be. It's extremely important, and it's extremely important that you become knowledgeable of that landscape and understanding it. And trying not to take any kind of particular political bias. You may have a bias, but try to step outside of yourself and look at it from both sides of the issue. And then the same thing with economic. I mean, economic is a little bit more objective because you can look at economic reports, for instance. You can look at public sentiment. All of those things will come into play. All right, the second step, and these all kind of follow in line. Identify the short medium, and long term direction. What I mean by that is your bias, your bullish or bearish bias. And that's really, really important. And not only do you determine that bias, for instance, when I look at this chart here, this is the E-mini S&P, and I look at it from a very long-term point of view. I mean, there's no doubt that this market is bullish. Long-term, this market is bullish since 2008. I mean, there's no other way to characterize this as but a bullish market. If I were to look at it from a medium-term view, maybe medium-term might be over the past year. All right, so I'm going to look at about a year, maybe a little bit more, and I see a market that looks like it's in disarray, like it's neutral. It's neither up nor down. If I zoom in a little bit more, just try to get what I want to see in here. All right. I zoom in a little bit more over the past several months. Since the beginning of this year, it's been incredibly bullish with a V bottom. There is no other way to look at this. And I could go even shorter term, so perhaps instead of going to the daily chart, now I go to a 4-hour chart. This is bullish over the past week or so. Definitely bullish. How bullish? Well, I mean, that depends on your definition of bullish. And again, the macroeconomic and political aspects come into this. Those might produce some tailwinds or some roadblocks. All of this, incredibly important. All right, let's go back to the steps. And so when we talk about this, identifying the short, medium, and long-term direction, the other thing that you need to bring into this discussion, besides that macroeconomic and political stuff, is the high probability chart and candle patterns. You should be very familiar with, traditional chart and candle patterns. For instance, pennants or flags, reversal patterns, continuation patterns. Understand which ones and under what particular and very exacting context that they have the highest probability. Look at also candle patterns for shorter term analysis, and which ones have the highest degree of probability. And the easiest way to find this out, I don't mean just, your idea. Go to a source that has already mapped this stuff out and done a probability study. And the best site that I can recommend for something like that is Thomas Bukowski's thepatternSite.com. There he has mapped out chart patterns and candle patterns and then ranked them based on literally millions and millions of charts. So we have statistical evidence. And then he also puts that into context, based on something looking like this or that. Very, very important that you understand this stuff. And very, very important that you determine your direction and potential influencers, to what's going on here. All right. So then the next thing that you do is that you map Market structure. In multi-time frames. And what I'm talking about here is this is where you're using volume profile. So just like what we did earlier and looked at the bullish or bearishness of something in short, medium, and long term, we're going to do the same thing with market profile. We're going to map out the you can see these lines that I have here where I've started to map this out. As I bring in more and more information into the chart, I get different profiles, different volume profiles. That's because I'm adding more information. As I add more information, these different value nodes and volume wells start becoming more apparent, and I can start picking those off. All right. As I zoom in, I'm getting a little bit different look. Now, this is important because when you map the big picture long term, you're looking at a market structure that has existed for a while and represents people that have taken positions in the market that hold it for a long term. And it's going to show you very long term, and the long term has a great influence over the near term. And sometimes when you're looking at the near term, you don't see these market structures that exist. And so it's important that you start with the long term and then continue to add these lines that basically demarcate market structure so that you can see it. And as you zoom in closer and closer and closer, these lines will start taking on relevance. See, I can't see all the lines now, but they still exist. Now I can maybe refine them. Because let's see, let's go back to the talking head. That's me. As a general rule, the older a market structure, or the longer term it is, and the bigger the volume node or the volume well is, or the sharper the demarcation between a node and a well, is going to have great influence over the short term. Then as you get down to the short term, again, you kind of weight all of that, how big the node is, how big the well is. And one way that you can kind of organize that is that you could change the color of the lines that you draw, or change the width, the thickness of them, to denote long-term versus near-term, mid-term and near-term. Very important that you then map out that structure. All right, let's go back to the split screen. And then the very last thing that you do is you chart out the most likely to least likely, or I guess you could say most to least likely paths. Let's put that up here so you can see that. Chart the most to least likely paths that price may take based on your knowledge of market structure and the behavior of price as it traverses across those paths. So what this is saying is that you're not going to just choose, one path at first. You want to choose multiple paths. You want to choose what you think is the most likely, the second most likely, choose the bullish and the bearish case, and map them all out, all over. You can use, again, a color-coded system, line thickness, whatever works for you. And then, as time goes on, you should then be updating these paths as situations change. Hopefully the longer-term stuff won't be changing that much, and sometimes you'll be surprised about whether or not you nailed it on the head with the path, and price seems to follow right along with what you're doing. And sometimes it won't. It will be a complete surprise. It will be a misdirection, but there could be a reason for it. It could have been a change in economic or political landscape. There could have been a report or some outbreak in some foreign land. It could be anything that influences the direction, the actual direction, as opposed to your direction. But still, this is all a learning process and an update process, and it takes time to go over it over and over and then refine. All right, so there you go. There are the primary steps for mapping out a volume profile, your market profile, on your expected this is really what we're getting down to, this last part. Charting the most or least likely paths. And when I say the least, not really the least, the most to the second most to the third most, and again, looking at both the bullish and bearish possible directions. You should be weighting those paths based on these first three steps. Now, this sounds like a lot, but once you get to this point, to number 4, and you have paths already set up, and it makes sense, you're going to get a level of clarity in terms of the trades that you want to take, the amount of money that you want to put towards them, the level of just the overall level of whether or not you think that has a good chance. What are the probabilities, the level of probability, the level of confidence that you have in that trade will be borne out in this methodology. This is the methodology. Now, mapping it out here and then actually seeing it done and then practicing it are two different things. But these are the steps that we follow. And if you're interested in doing this, come follow me. This particular video is part of our volume profile course. If you'd like to be part of that, go to traderoffutures.com. Right there, traderoffutures.com. Take care. We'll see you next video.